Hey there, traders. This is Sam. Welcome back to another E-mini Futures market recap for Wednesday, January 15, 2025. I'm back from being out of the country for the past few weeks. What I want to do is recap what transpired in the SPY and the E-mini Futures during that time, at least at a high level. I won't get into the details for the sake of keeping this video from being too long. Plus, I want to go over how 2024 looked in terms of all the metrics we track, since we have that data now. So that will be at the end of the video. For about 9 or 10 days that I was gone, I was able to run the numbers and send out the morning email to those of you on my list. So I hope that helped. There were some good trades from December 23 through today. In fact, that's what I have in this blue square. I was gone from December 23 through today. So we'll kind of cover what happened during that time. I was actually able to trade a few times myself, 5 or 6 times. Once was when I was on a plane waiting for them to de-ice the wings before we took off. I was looking at the SPY and the E-minis on my phone, and I knew I had some time. I saw a good opportunity develop, so I took it. And luckily, that was a quick trade, able to pocket some profit and shut down before the plane took off. I don't usually trade on my phone. I'd just rather have more data in front of me. But in that case, everything worked out well. And another quick trade I took was also on my phone a few days later. So I don't have recordings of those to show, but we will look at a couple recordings from trades that I took on my laptop computer a couple different times. First, I'll show the emails of the daily levels that I sent out starting on December 23rd. So if you want to, you can go back to the days in question and plot the levels to see how they worked out. We'll look at the tracking logs later, of course, so you can see how the levels would have worked out if you were playing by the rules and, of course, my own trades. You'll just have to take my word for how the trades worked out because I just don't think it makes sense to go into the charts for each one of the days over the last few weeks. This is December 24. Of course, the market was closed on Christmas, the 25th. So I had the 27th. I was able to run the numbers that day. This was December 30. There are the levels just on the screenshot of the chart. Didn't have a lot of time, so that's how I did it. January 2. January 3. This is the 7th of January. Monday this week. Yesterday, and today, January 15. There is one chart, Tuesday, January 7, which is right here. You can see this is between the vertical lines. This is January 7. I want to show you this chart because it was not a good day. These are the levels for the day. There was a PMI data release at 10 a.m. Eastern that morning, and that happened to be the catalyst for price to get pushed down quite a bit in a short amount of time. So if you had traded this level up here at 596.30, you would have been on the long side right here. And then a couple minutes later, price just plummeted. Trapdoor was opened. So they hit the next level down. And by that time, you were 20 points out of the money. Got there pretty quickly. And that is my max loss limit. So bailing out of the trade then would have put you behind the curve for the day. But there were other levels that worked in various ways. So about half of that loss was removed. We'll look at that in the tracking log. So this was really the only day that ended in the red during the past few weeks, if you were trading each level each day by the rules. So the first trade I took when I was out of the country was on the plane, as I mentioned earlier, on my phone. So I don't have a recording to show with that. But this trade a few days later on January 3rd was on my computer. It was a good trade. I went short with 4 contracts up at 589.35. The level for the day was 589.40. Felt really good about that level being good overhead resistance. I went short with 4 contracts and rode that trade down 22 points. It's a nice trade, over $4,000. That was it for that day. There was another quick trade on January 6 that I did on my phone. I traded 4 contracts and I got a quick 5 points, so that was $1,000. And then this one here on the 13th, which is Monday this week, 10 points with 2 contracts. You'll notice that I didn't go long right after that 15-minute mark when they were above this level. I waited a couple more minutes. I got a better price, and it didn't take very long for them to get up 10 points or so and kept climbing, and that was the only thing I did. I can scrub ahead and show you, just let this thing run, but no more trades for Monday. And then yesterday, January 14, I took 1 trade at a level I identified in real time. You'll see me add the level to the chart later. I went long when the SPY was around 583.14, basically below the low of this opening range here. Bought a couple contracts. I pulled 14 points with those 2 contracts. And I was ready to buy again down here, but they never got there. So kind of let this one develop. I think at some point I added a level. Let me just scrub ahead here and show you. Yep, there we go. So there's the 583, roughly the equivalent. And there's the 14 points with 2 contracts. And that's all I did for that day. Just gonna scrub ahead here till I stopped the recording around 10:30. And then today there was one trade that I took. It was the only level hit, and I only pulled a 4-point base hit. So it was pretty much what you would have expected to get if you were playing by the rules anyway. I didn't hold for more points or anything like that. When they got back down to 590.47 later in the morning, I went long with 3 contracts and waited it out. It took some time to develop, but I got my 4 points after, I think, about 35 minutes or so. And I can scrub ahead and show you. There we go. I'm in it. It was triggered as soon as the SPY hit 590.47, and this just took some time. And while they were below the fumble threshold here, there was nothing violated that would have given me a clue or a signal to reverse or get out of the trade. So here, this just slows down to real time here. I'll just let this go. This is the 4 points with 3 contracts, and I think the rest of this recording is just real time. So I'll just move ahead to show you. I stopped this recording right after noon or so. And that's all the recordings I have. So here are the tracking logs, and what we're looking at is December 23rd through today. This is the entire time that I was away. So if you're trading 2 contracts every single day, then that's a little over $5,500, including this max loss day here, this TKO, if you will. So not too bad. And then on my trades, there's not very many, half a dozen trades or so during that same time. And I highlighted them over here in this table so you can see which ones they were. It was 2 contracts here, 4, 2, and 3 today. So that was over $8,000. Not a bad vacation, pretty profitable. And of course, what we're looking at here on both of these logs is everything from 2022 through today. So that includes 3 full years, and we're into the 4th year. So that means all the metrics here, the rate of return, the trade days, the profit and loss metrics, which is, once again, the days ending in the green is profit, days ending in the red is a loss. So that's how I track that. So this is pretty comprehensive. However, if we just look at 2024, go up and find the bottom of 2024 here, this is playing by the rules for the year. 183% rate of return, and you can read the profit and loss metrics and the daily averages and everything else. So this 183% rate of return assumes you started the year with $50,000 and traded 2 contracts at each level throughout the year. So the thing is, while you can afford to trade more than 2 contracts with a $50,000 starting balance, this is not accounting for the fact that you would get to a point where you can comfortably trade 3, perhaps even 4 contracts as your account grows. So this is only 2 contracts at each level throughout the year. And at the very end of the year, 91,575. That's what everything I've highlighted with the 2 contracts. So there's your 183% for the year. So, $141,000 or so. And then my trades for the year, let's just filter out 2024, go back up and find the bottom. There we are. And 253%. Now, as you know, starting in March, all the trades are the same as played by the rules, but I switched sometime in March and kept track of this own Sam's trades just to differentiate the two, because as you've seen, I've shown you every single one of these trades, or the vast majority of them. So as you've seen, many of these trades are just more creative. I may lose more sometimes, but I'm certainly holding for more points or trading bigger lot sizes. Depends on how good I feel about a level. So you can see the profit and loss daily averages based on the trades I've taken. I never really intended for me to give away these levels for almost a year, but in doing so, you've had the ability to see what is possible throughout the year if you're just sticking to a process. Trying to be as transparent as possible. So I hope that helps, and it's been a pretty good year. And whatever happens in 2025, doesn't matter whether it's bullish or bearish. When you trade the futures, you can make money on both sides of the tape. So looking forward to it. So back on the daily chart, let's talk about a few things. So I have a horizontal line on the bottom of this big breakdown candle from December 18. So it's not too surprising that price, as it climbed this breakdown candle, found some resistance toward the top of it, fell down. They tried a couple times. Well, they got below last week. This is Friday, January 10th. A daily close below. This is Monday, Tuesday, and then today they gap above it. So it was weak when they were below this. And this could still play in the downside because they've got this overhead resistance and this trend line. I just kind of put this here to kind of give you an idea. All these lower highs are painting a picture that this consolidation, this bearish consolidation, is still very much intact. They've got to close candles, daily candles, above the high of this, break the top of this breakdown candle, get above. Of course, at that point, they're at the all-time highs again. The bulls will probably be pretty excited, and price could continue to go higher, but they've got to get above this. So there's a lot of space here, and of course, they could fall. So they're in the middle of this. I just want to point out what's going on here. This type of consolidation would generally play to the downside, and I thought that's what was going on here. But they got a little bit of energy to jump today, and we'll see what happens. Probably more volatility is coming if volume picks up. So just a quick overview of what might be happening. And honestly, I haven't really dug into too much. I'm just looking at the daily chart. I'm going to do the work tomorrow morning to have more refined levels, as you know. And the levels will have high probability chance of providing at least base hit trades, as you know. And if you're interested, by the way, in getting these levels for yourself, I'm still going to give them away until the course and the subscription is available. Then head over to ticksandtrades.com. There's a form you can fill out. I'll get your information and add you to the list, and you will receive the emails like the ones you saw at the beginning of this video. So that's what I have for today. Thanks for watching. As you know, tomorrow morning there will be new levels sent out and a new game plan. I'm looking forward to what 2025 has to offer. It's good to be back. Thanks again for your support. I'll catch you in the next recap video. Have a great rest of your day.